The global trade landscape underwent a significant transformation during the Trump administration. President Trump, a staunch critic of globalization and multilateral trade agreements, implemented a series of tariffs on goods imported from various countries, most notably China. This protectionist approach, aimed at reducing trade deficits and bolstering domestic manufacturing, ignited a trade war with China and introduced uncertainty into the global economy. These tariffs, essentially taxes on imported goods, increased costs for businesses and consumers, impacting a wide range of sectors, from manufacturing to agriculture and tourism. The tariffs became a defining characteristic of Trump's economic policy, sparking intense debate about their effectiveness and long-term consequences. Proponents argued that tariffs were necessary to protect American jobs and industries from unfair foreign competition. Critics, however, countered that they would ultimately harm American businesses and consumers by driving up prices and disrupting supply chains. The impact of these tariffs continues to reverberate through the global economy, highlighting the interconnectedness of international trade and the complexities of navigating trade policy in an increasingly globalized world. President Trump's decision to impose tariffs stemmed from his belief that decades of globalization had led to the decline of American manufacturing and the loss of jobs to countries with lower labor costs. He argued that existing trade deals were unfair to the United States, putting American workers at a disadvantage. The tariffs, in his view, were necessary to level the playing field, protect American jobs, and encourage companies to bring manufacturing back to the United States. The administration's trade policy, often described as America First, aimed to reduce the trade deficit, which Trump saw as a sign of economic weakness. By imposing tariffs on goods from countries like China, Mexico, and the European Union, the Trump administration sought to make imported goods more expensive, thereby boosting the competitiveness of American-made products. This protectionist approach, while popular with some segments of the population, particularly those employed in manufacturing, drew criticism from economists and businesses who argued that it would ultimately lead to higher prices for consumers and retaliatory tariffs from trading partners, harming the overall economy. One of the sectors significantly impacted by the Trump administration's trade policies was tourism. The tariffs, combined with heightened rhetoric about immigration and security, contributed to a decline in international travel to the United States. The tourism industry, a major contributor to the U.S. economy, faced uncertainty and economic headwinds as the number of international visitors dwindled. The decline in tourism was particularly pronounced in destinations heavily reliant on international visitors, such as New York City, Los Angeles, and Miami. Businesses catering to tourists, including hotels, restaurants, and retailers, experienced a drop in revenue, forcing some to lay off employees or even close their doors. The tariffs, by increasing the cost of travel and creating a perception of the United States as unwelcoming, had a ripple effect throughout the tourism industry, impacting not only large corporations, but also small businesses and local economies dependent on tourist spending. The tariffs imposed by the Trump administration sent shockwaves through the U.S. economy, impacting businesses of all sizes. Small businesses, often operating on thin margins, were particularly vulnerable to the increased costs associated with tariffs. Many businesses reliant on imported goods, from manufacturers to retailers, faced difficult choices as the prices of raw materials and finished products rose. In tourist destinations like Hawaii, where the cost of living was already high, the tariffs exacerbated the challenges faced by local businesses. The islands, heavily reliant on tourism and imported goods, saw a decline in visitor spending and an increase in the cost of doing business. Restaurants, for example, faced higher prices for imported food and beverages, while retailers struggled to absorb the increased costs of imported goods, leading to higher prices for consumers. The tariffs, intended to protect American businesses, inadvertently put a strain on many small businesses, particularly those in tourist areas heavily dependent on global supply chains. Section 5. Ripples through the economy, market volatility and consumer confidence. The implementation of tariffs introduced uncertainty into the global economy, contributing to market volatility and dampening consumer confidence. Financial markets, sensitive to shifts in trade policy and economic outlook, reacted with fluctuations as investors assessed the potential impact of tariffs on corporate profits and global growth. The uncertainty surrounding trade policy made it difficult for businesses to plan for the future, potentially hindering investment and economic expansion. Consumers, faced with the prospect of higher prices, became more cautious in their spending habits. The tariffs, by increasing the cost of imported goods, had the potential to fuel inflation, eroding consumer purchasing power. The uncertainty surrounding trade policy and its potential impact on the economy weighed on consumer sentiment, leading to a decline in consumer confidence, a key driver of economic growth. The tariffs, while intended to protect American jobs and industries, introduced an element of risk and unpredictability into the economy, impacting both businesses and consumers. Section 6. A global chess match. Retaliatory measures and trade negotiations. The Trump administration's tariffs triggered a series of retaliatory measures from trading partners, igniting a trade war that had global implications. China, the European Union, Canada, and Mexico, among others, responded to U.S. tariffs with tariffs of their own, targeting American goods ranging from agricultural products to manufactured goods. These tit-for-tat tariffs escalated trade tensions and disrupted global supply chains, impacting businesses and consumers worldwide. The trade war highlighted the interconnectedness of the global economy and the potential consequences of protectionist policies. The Trump administration engaged in trade negotiations with several countries, seeking to renegotiate existing trade deals and reduce trade deficits. These negotiations, often tense and protracted, resulted in some agreements, such as the United States-Mexico-Canada Agreement, which replaced the North American Free Trade Agreement. However, the trade war with China, marked by rounds of tariffs and counter-tariffs, remained a significant source of economic uncertainty, with implications for global growth and stability. Section 7. Beyond the silver screen, entertainment and media feel the pinch. The Trump administration's tariffs extended to entertainment and media. Tariffs on Chinese goods increased costs for producing films, TV shows, and video games. Higher costs for imported cameras and lighting gear impacted production budgets. The media industry, reliant on advertising revenue, faced challenges from economic slowdown. Tariffs on paper further strained newspapers and magazines transitioning to digital. Section 8. A nation divided. The tariff debate rages on. The Trump administration's tariffs ignited a fierce debate in the United States, dividing economists, businesses, and the public. Proponents of the tariffs argued that they were necessary to protect American jobs and industries from unfair foreign competition, reduce the trade deficit, and bring back manufacturing to the United States. They pointed to instances where tariffs had led to job growth in specific industries as evidence of their effectiveness. Opponents of the tariffs, however, argued that they were counterproductive, ultimately harming American businesses and consumers by driving up prices, disrupting supply chains, and inviting retaliatory tariffs from trading partners. They contended that the tariffs would lead to job losses in industries reliant on imported goods and hurt the overall economy. The debate over tariffs became a proxy for broader discussions about globalization, trade policy, and the role of government in the economy. The tariffs, a signature policy of the Trump administration, exposed deep divisions in American society about the costs and benefits of globalization and the best path forward for the U.S. economy. Section 9. Charting a course through uncertainty, adaptation, and innovation in a globalized world. The Trump administration's tariffs underscored the complexities of global trade and the challenges of navigating an interconnected world. The tariffs, by increasing costs and disrupting supply chains, forced businesses to adapt and innovate to remain competitive. Some companies responded by diversifying their supply chains, seeking alternative sources for raw materials and finished goods outside of countries affected by tariffs. Others focused on increasing efficiency and reducing costs to offset the impact of tariffs. The tariffs also highlighted the importance of innovation and the development of new technologies that could enhance productivity and reduce reliance on imported goods. The trade tensions of the Trump era served as a reminder that the global economy is in a constant state of flux and that businesses must be agile and adaptable to thrive in an environment of uncertainty. The tariffs, while disruptive in the short term, could potentially lead to long-term changes in global trade patterns and business practices as companies adjust to the new realities of international commerce.